Greetings, ladies and gentlemen. I'm Elena Gomez, and welcome to this week's edition of Neobanking Newsbeat, your concise news bulletin on the latest happenings in the neobanking world. Stay tuned as we bring you the latest updates from around the world. The U.S. Bank National Association faces a $15 million civil money penalty from the OCC for unfair practices related to the administration of a prepaid card program for public unemployment insurance benefits. Violations occurred from August 2020 to at least March 2021, with the bank's deficient processes causing delays in consumer access to benefits. The OCC's penalty, coordinated with the CFPB, requires the bank to pay $15 million and provide redress to affected consumers. The OCC's share of the penalty will go to the U.S. Treasury. Saudi-based fintech savings platform Hakba has successfully raised $5.1 million in its series of funding round led by VentureSuk, with participation from M Capital, Bunit Ventures, Global Ventures, and Adidum Investment Management. Hakba, one of MENA's fastest-growing startups, operates in Saudi Arabia's $216 billion savings market and has seen significant growth with an 18x increase in total savings under management and a 4x increase in revenue this year. The funds will be used for product development, focusing on machine learning, strengthening its savings engine, and expanding into 2 regional markets. Hakba's social savings platform aims to address the Middle East savings crisis. Ripple's Irish subsidiary, Ripple Markets Ireland Limited, is now a registered virtual asset service provider (VSP) with the Central Bank of Ireland (CBI). This designation enables Ripple Markets to offer digital asset services within Ireland and, post the enactment of the Markets in Crypto Assets Regulation (MiCA) in 2024, extend services across the European Economic Area. Ripple's move to Ireland aligns with the country's favorable stance on virtual assets. Ripple emphasizes collaboration with global regulators, recently securing a major payments institution license in Singapore and gaining approval for the digital asset XRP in Dubai's International Financial Centre. Revolut, the UK fintech giant, is poised to achieve $1.9 billion in revenue this year, almost doubling the previous year's $1 billion, fueled by robust customer growth averaging 300,000 users weekly. With nearly 40 million customers, the revenue surge is a positive development for Revolut, valued at £26 billion. Despite delays in filing annual accounts and pending a UK banking license, the company's impressive financial performance marks a recovery from recent challenges, including concerns raised by auditors about verifying revenue and the protracted licensing process with the FCA. UAE's Buy Now, Pay Later firm Tabby secures $700 million in debt financing from JP Morgan, extending its Series D round to $250 million. Tabby, valued at $1.5 billion after a $200 million funding round in November, plans an IPO in Saudi Arabia. The additional funding includes $50 million from Hassanah Investment Company, Soros Capital Management, and Saudi Venture Capital. Tabby manages $6 billion in annualized transaction volume, serving 10 million users and 30,000 brands. The debt facility is a regional milestone, reflecting the growing fintech landscape. Tabby expands offerings with Tabby Shop and gains traction in physical stores. And that wraps up this week's edition of Neobanking Newsbeat. Thank you for joining us. We'll be back next week with more news and insights. This is Elena Gomez signing off. Have a great week ahead.